Okay, welcome everyone. Let's get right into the stock market technical analysis. We're going to take a look starting off with just the S&P 500 heat map here that I'm showing, and I want to cover a couple things, and then we'll dig into the individual charts looking for actionable trade ideas. That's the key here. We want to look for ideas that ultimately either haven't played out or just continue to work, and opportunities still exist. I'm not going to point out trades that have already played out or just tell you why the price went down or why the price went up. That doesn't make any sense. What we're looking for is where we think the price is going in the future and a technical reason why. We use the charts to be our guide there. So guys, drop me a thumbs up if you find value in the content. Also, check out my stock market technical analysis course. That is in the link in the description below. That is available for my subscribers. It's not free, but it's very affordable, and there's a good value there. So check that out if you're interested. That should help you build a skill set. All right, starting off, again, the theme that we've been going with is long tech, short oil, okay? Or short energy plays, basically. And that, you can see today, is working pretty nicely. The FANG stocks are up. Healthcare's catching a bit as well. I don't know what's going on there, but the FANG stocks are up, and tech in general looks to be doing good, and you can see energy is weak. So we're continuing to see some rotation out of the commodities play, especially energy, essentially, and into tech. And that makes sense because here's the thing. Tech has sold off a bunch, and the commodities have been they've been the winners, and tech has been the losers. So we're seeing some rotation. I think that's going to continue for the next couple weeks, maybe even months. So looking at, let's go in. I want to show you guys DBA real quick. This is the commodities, ag commodities. We got a sell signal on this a couple days ago. And you can see, and I'm not trading it. I'm really more interested in buying the dip on this, but I think this is going into a correction over the next couple months. And you can see here on the commodities DBA index, uptrend line on the daily chart going back to June of 2020. So this is the bull trend in commodities, but we broke that trend a couple days ago. We had negative divergence building for a while on both momentum indicators. And then boom, your sell signal, could have come right there, but that's pretty clean, definitely right there 2 days ago. And nothing but big impulsive selling ever since, just gapping down and selling and heading right down to the 200 days. So support's right down here about 2060. You should get a bounce there. That's likely a spot where you'd want to maybe go long, and at least in my opinion, probably for a bounce, maybe even at least up to 2136, but maybe even a full back test. We'll see. Okay, so that's where DBA is at, but that's a breakdown in the commodities. So at the end of the day, we've got a bull trend that has now broken, and looks like we're going into a corrective period. So that again is setting us up for in the future for the commodities reading to kind of come down a little, and then everybody's going to declare victory. The Fed will declare victory that the inflation is slowing, and the market will see that as, okay, let's rally because inflation's slowing, which means the Fed doesn't have to be as hawkish as they've been talking about. Again, we've talked about this the entire time. The Fed can't raise interest rates that much, so what they need to do is talk really hawkish. And then when the inflation starts to ease off a little, then they can ease off their talk. And at the end of the day, the end result, the Fed never really raised interest rates that high. Okay, so they just talk the market down a little bit and then raise interest rates a little, but never really actually raise the interest rates that high, although they talk like they were going to. I think that's the play. So I see commodities coming down. I think that's going to be good for gold here in the future. And good for, and then tech as well, gold and tech actually, because tech is very interest rate sensitive. So, all right. So speaking of interest rates, let's look at the TLT. They're catching a bid today. Bonds continue to catch a bid. Bonds continue to rally, and so that's the point, right? This is the interest rates are coming down because maybe, who knows why? Maybe the market sees inflation coming down a little bit, and so the bonds are more attractive. But the reality is it doesn't really matter. What matters is bonds are catching a bid, interest rates are coming down. That should be good for tech. And again, also good for gold. So here's tech, triple Qs moving in on the daily chart. We got to really look at the hourly to give you guys the micro focus. A little bit of this triangle pattern that's been building for the last couple days. At the end of the day, what I need to see, get rid of that. We've got a resistance right here, 285.20, and we've got a gap to fill right there at 288.58. So I'm expecting we're probably going to fill that gap by the end of the week. I don't know if we go much beyond that, but I think we probably fill that gap by the end of the week. And we have another gap up here at 299.13. Looking at the daily chart, if we're going to have a sustainable rally that lasts for a while, I suspect the two targets that I would really look at is right here. One at 3, it's about 318, 317.88. Okay, you can see on the daily, that's big resistance. It was big support through here and we broke. We haven't really tested that from underneath yet. We got close right here. They made it look, we got at 314, never really got up to that 318. So that would be a target for sure, right up there. And then if we break above that, we have a downtrend to watch and, starting off the all-time highs in triple Qs, and that's right up there at about 337-ish as of right now, heading lower. So that would be my final target if we're going to get up there and rally, would be a tag of that downtrend line. And I think we can do it. I really do think this is where we're heading in the future. So I'm positioned long right now in a couple names. I'm positioned in triple Qs long. I do have some Meta. I picked up some Facebook. It's been one of the dogs, one of the weaker things. So I expect it to catch a rally, maybe one of the stronger rallies. Meta, but another way to own Meta is just to buy the triple Qs because it's in there. So it's a couple gaps to fill. I don't know if you fill the gap, but a good target for me on this one, you can see is I've got it kind of circled, this big sideways zone right there at 246.41. All right, I would look for that to be a potential rally target up there. I don't think we're going to fill this gap. To me, that looks like the long-term bull trap that's trapped in all this money, but we could easily rally up here, hit the gap, maybe even enter the gap and then fail. If we get close to the gap entry right there, I'd be looking to take profit on that long. But that is, from where we're at right now, a move of about 50%. So pretty solid for a bear market rally if we're going to get it. Okay, and then again on this one, the other thing to point out, the reason why I like this one maybe even better than some of the others is, first, it's been sold pretty hard. Bullish divergence right here on both momentum indicators. And we continue to kind of drift, hitting support just recently right there. So you can see all the tags of support. So I like to go long here. If I think the market's going to rally, I want to buy at support. And we're at support. We have bullish divergence, looking for a move up to the top of this channel and ultimately breaking out and running up towards that final target. So I like that. Look, ROLEX. I took a long position in this one the other day. Not a huge position, but this thing can run. It's already up 8% today. So this one, and I'm seeing some of these speculative names are starting to catch a bid. So they're the ones that look like they're about to rally. And they all haven't broken out yet, but ROLEX, this one clearly has downtrend line coming off of the all-time highs right here. This one doesn't have a lot of history, but here's your downtrend line to watch. Bullish divergence on the momentum indicators here, building for a while. And then we had, let me zoom in, we had a buy signal right here on June 21st. That's where I took it at the end of the day. And, straight up since there. So again, looks like a buy signal. First area of resistance that we should come into, if I have it right, right there at about $36, 36.08, 36. So getting close. That's the area we're likely going to get a pullback there. Keep an eye on Netflix. I'm not long this one yet because really I need to see it break out, and I'm looking for a break above this downtrend line right there. So some sort of breakout above there should be our buy signal. Again, we have bullish divergence. It's been building on the momentum, on both momentum indicators for a while. So I think if we get that buy signal, we should be able to There's a slight downtrend line, but ultimately we got some gaps. I think we, at a minimum, I think we fill this gap, this first gap. There's two gaps in Netflix. I don't think we fill this one way up here at 504.50. That would be gap fill, but I do think we could do that one right there at 328.92, and that would be a move. You know, let's say we get the breakout, 60-70% rally. So that's what we're kind of looking at in some of these really heavily sold names, is a strong bear market rally. It doesn't have to take place. We don't have to get it. And oftentimes, you know, when rallies just start looking like they're about to take off, they fail because we are in a bear market. So we don't want to trust the rally. But, you know, you do get rallies when everyone's loaded short. Everyone's extremely bearish right now. That's about the time you get a short squeeze. We start squeezing out some of these late to the party shorts. Again, going back to the Qs, on this channel, we shorted triple Qs right there, January 4th. My short came right there. All right, so nobody wanted to short there. You go back and look at the comments from my January 4th video, and you talk about, there'll be all kinds of stuff saying, you're shorting in a bull market. That's the wrong move. You know, it's not, you know, the trend is your friend. You hear all these little retail sayings, you know, don't fight the Fed, things like that. You just hear all this stuff when, you know, nobody's bearish when markets are rallying, and then everybody's bearish down here. That's just the reality of it, because most people, especially retail, just follow price action. So when price is moving up, they're bullish. When price is way down here, they're bearish. And oftentimes the technicals will tell us that we actually want to be the opposite of what the price is. So, you know, now starting to be bullish. I was bearish up here. So, yeah, that's it. Okay, Vale. This one looks like it's coming into a potential zone of support, and I want to point it out as a potential trade. Again, the commodities, especially the ag commodities, they're coming down to the 200 days, so I'm expecting a bounce down there. This is not an ag commodity, but they do trade in the iron or steel, you know, iron industry. So on Vale, you've got a long-term, here's your bull trend coming off 2016. You can see support all through here. We're coming back down to that trend line. Not there yet, but very close. And you can see we've got bullish divergence that's in place right now. So this low right here is a lower low in price than the former low right there, but momentum is higher. So bullish divergence coming into a longer term support, could be a zone to buy at. You know, it makes sense. It's objective to buy down here at this trend line. About right now, it's about 1380-ish. So another 50 cents or so to the downside, and you'll be at that key low risk, high probability area. And that's where we want to trade. So you could take a long there with a stop slightly below. You know, you got to give a little of room in case they run the stops, but I would expect it holds here. And, you know, again, you probably see the ag commodities bounce off that 200, which probably will just, you know, just commodities in general will probably catch a bid. So some of these trades, they're not, they have long setups, but they're not actionable yet. Here's Etsy. Again, downtrend line to watch here on the daily chart. Bullish divergence on both momentum indicators right there at key resistance. All right, so no buy signal. Need to see a breakout above that trend line for the buy signal, but if you get it, then levels to watch are 92.68, and the good one, the best level, I think, is 110.42. That's a nice solid level. Probably don't go much beyond that, but again, the 200's way up here heading down, so maybe they meet somewhere in the middle. Those are the levels I'd watch from where it's at up to that level 40%. All right, so potential for big rallies in these things, but again, no buy signal, so I'm not long this. I will not buy it until I see that buy signal, but there's definitely a setup there. Same with like DraftKings, bullish divergence. That's been building for a while. All right, it's kind of marked out here, and on the RSI, it's way down here. Was really oversold down here, but it's basically there, right there at key resistance. You get the buy signal. We don't have it yet, but if you get a breakout, then levels of resistance 1848. And yeah, not as many clean levels, but I do in the 200s right there. So this one, you know, I'd go with 1848, and then probably 27.80, but the 200 is probably what I'd look at. A hit of that 200 is about as good as I'd go for a rally. Again, no buy signal, so I just want to reiterate that. Carvana continues to move higher. Again, we had a buy signal on this one. I pointed it out the other day, but basically right there, June 21st, you had a bullish falling wedge pattern. You have bullish divergence on the momentum. You have a buy signal and continuing to move higher, up 10% today. So I don't see any resistance on this until we get up to 33, about 34. Okay, first level of resistance, probably get a pullback there, and then a move up to 44.79. And end result, I think on this one, we actually move up to this trend line way up here. This is your downtrend line in Carvana. So Carvana isn't a downtrend, but I think we're going to get a move up. And it's not going to be all at once. It's going to be rent, bounce, hit, bounce, and then like that. All right. So I like it. Still moving higher. Oil stocks, XOM, just continuing lower, basically, it looks like. So for this one, it's at support, right? The recent lows is support 86.15. So we need to see that get taken out. Until that goes, I don't have a sell signal. I reshorted it a little bit today and then just covered it right there at the low. And I'm looking for that to get taken out. That gets taken out. That's a continuation of the sell signal, which means it should trade right down to the 200. All right, so that's the near-term target there. But need to take out those recent lows. Otherwise, we might just chop around here for a while. And then DVN continuing lower, it looks like. And again, the 200's down there. So I think we're probably going to hit that 200. Yeah, that's what I see on that one. Gold, still stuck in the mud, basically, chopping sideways. We've been going sideways since May 11th, so almost 2 months now. And no indication that that's going to change. So still holding support, not moving up, not moving down. It looks like accumulation, all right? It looks like an area of accumulation where we should, eventually break one way or the other, and I think it's going to break to the upside. But again, we need to see it, so I'll just move on. Okay, net, this looks like a buy signal here today. Again, cloud name, software, tech. And on this one, you've got a downtrend line to watch here on the daily. All right, that's been in the downtrend. We've got bullish divergence that's just formed over the last month or so here on the RSI, and it's there on the PPO. And you've got a buy signal today. Boom, there's a breakout. All right, first level of resistance is right there, 51.86. So I suspect we'll get there probably today, actually, or today or tomorrow, but because it's already up 7%, but this thing can run. And that's what I would watch. And then some key levels. So you probably get a pullback at that 51.86, 51, well, it's about 51. If we go to the hourly here, we could probably narrow it down. Yeah, probably. Yeah, 51. I got it at 51.70, okay? Don't hold me to the pennies. And on the daily, and then we've got a gap to fill. So I'd look at that as probably a decent target right there as a gap fill. I like that level right there. And that is up there at 75.82. So from where we're at now, if we get that rally up there to fill that gap, 58.60%. All right, so I like that as a potential trade idea. That's about as far as I'd probably let that one go. The 200's heading down, so they'll likely meet up together. But I like that as a buy signal today. Okay, guys, I'm gonna take off. So leave me a thumbs up. Hopefully, you guys find value in the content. Check out the course. All right, the course is gonna give you a skill set to help you find your own trades and really analyze your own trades, making you, a much more proficient trader. I can't guarantee you'll be profitable, but you're definitely gonna be more efficient. These videos the trade ideas are gonna make more sense. So check that out. Link in the description below, and I will catch you guys on the next one.